Good day everyone, and thank you for watching this video update on what the Affordable Care Act means for you and your family. I'm Hudson Robillard from the CPA office of Hudson Robillard and Company. It's always a pleasure to share key facts and information with clients with the spirit of keeping you informed and assisting you in your most important business and health related decisions. I have already prepared two other videos aiming to provide you a more comprehensive update on the status of the various provisions of the Affordable Care Act impacting health insurance for individuals in the marketplace. I strongly recommend that you spend some time watching this video for more detailed information on the updates. Now, today is November 1st, 2017. The opening enrollment for health plan coverage to begin in January 2018. You have until December 15, 2017 to make your plan selections, and I strongly encourage you to do so within the time allowed to avoid any issues and penalties down the road. What the Affordable Care Act means for you and your family. The Affordable Care Act, not sure if you remember, has pretty much ushered in the most sweeping regulatory legislation to the U.S. healthcare system since Medicare and Medicaid were passed about 50 years ago. It raises a full range of healthcare issues and will continue to do so as provisions take effect through 2020. That is, if we don't have any new legislations, which is very likely. However, along with potentially increasing the affordability of health care insurance, that is potential premium increase, the Affordable Care Act also presents challenges and uncertainties for everyone pretty much. In this program, update on what the Affordable Care Act means for you and your family, I want to highlight some of the most important ACA provisions that affect individuals. As your CPA, my job is to explain the law's full implication and provide advice that will not only help you best meet your and your family's health and medical financial needs, but also deliver peace of mind, knowing that you've done what you were supposed to do and have the proper information. Let's talk about individual coverage requirements, exemptions, and options. The Affordable Care Act requires that you and any dependent have qualifying health insurance coverage, also referred to as minimum essential coverage, in effect each month of 2017, current fiscal year, forward. If you already have minimum essential coverage, let's say through your employer or a government-sponsored program, a direct purchase from an insurance company like a private insurance company, or the health insurance marketplace, the marketplace, you only need to maintain that coverage. That means you meet the requirements. However, if you are without the minimum essential coverage, you can purchase it in the marketplace starting today, November 1st through December 15th, for coverage beginning in January 2018. Also know that the marketplace facilitates the purchase of health insurance in each state in accordance with the Affordable Care Act. Now, you may be exempt from having the requirement to maintain coverage, and there are specific requirements. If your minimum payment for annual premiums is more than 8.13% of your household income, that's one, or if you're experiencing a hardship that prevents you from obtaining coverage, or if you belong to a group especially exempt from the coverage requirement, that's another one. Now, you must definitely take one of the following steps, which depends on your exemption category. It doesn't just come automatically, so you have to choose which way to get it and apply for it. Let's say you can claim your exemptions through your 2017 tax return in 2018, or you submit an exemptions to the marketplace with the required documentation to obtain an exemption code that will be reported on your tax return. Know that your applications and documentation requirements will vary based on exemptions category, and many people are choosing the wrong code, and that's creating a problem for them. Now, let's talk about what is the health insurance marketplace. The health insurance marketplace is where the purchase of health insurance for in each state in accordance with the Federal Health Care Act It provides government-regulated and standardized healthcare plans from which individuals, families, and small businesses can compare health insurance plans based on cost, benefits, and features, and use the same platform to enroll in coverage. The marketplace plans, you may have the bronze, silver, gold, or platinum, each based on the average percentage that the plan pays towards the healthcare services that you have. So there's more detail on that later on. What about penalty for lack of minimum coverage? If you don't have qualifying coverage, let's say for yourself or any dependent on your tax return, and do not qualify for an exemptions, you will be required to make an individual shared responsibility payment, sometimes referred to as a penalty, which is due when you file your annual income tax return. Now, what about subsidies and tax relief for some individuals? Now, you or your non-dependent children may be eligible for the premium tax credit, which can lower your out-of-pocket premiums if you, let's say, purchased insurance through the marketplace. That's how you get the premium tax credit. Or if you are ineligible for employer or government plan coverage, or if you are within specific low or moderate income limits, household income between 100% to 400% of the annual poverty line, or if you cannot be claimed as a dependent by another person on their tax return. Understand, filing a federal income tax return is also a requirement for the tax credit. You can have some or all of the estimated paid in advance to your insurance company to lower your monthly premiums, or wait to claim the credit when you file your tax return, which is what a lot of people are doing. Now, if you have the credit paid in advance, the advance payment will be reconciled with the actual credit when you file your tax return, and any overpayment needs to be paid back to the IRS. And a lot of people are not happy about this one because there tends to be some discrepancy. Here's a warning for you. To avoid any significant discrepancy, you should promptly report any changes to your income or household size to the marketplace. This can help establish the correct amount of advance payments, which will mitigate any credit repayment issues when you file your tax return. Finally, let's talk about changes in medical deductions, FSA contributions, and HSA distribution. I'll define a little bit what those are. Taxpayers under 65 years old can only deduct unreimbursed medical, dental expense that exceed 10% of their adjusted gross income. It remains 7.5% through 2017 if age 65 or older. Annual contribution to a health flexible spending arrangement, an FSA, limited to $2,550, that is inflation adjusted, and the planned maximum, whichever is less. 20% penalty up 10% for health savings accounts when you apply to non-qualified expense. I'm sure this was a lot of information, and you may have a number of questions. And if you need assistance to apply for a qualified health plan, please feel free to reach out to my office for any questions and comments. You may email us at info@hrcocpa.com, or you may text us or call us directly at 305-610-9819. Once again, my name is Hudson Robillard with the CPA Office of Hudson Robillard and Company. It's always a pleasure to share information such as this with you. I'd like for you to stay tuned and stay connected to our social media platform, as there will be more detailed session to follow. And I also like to ask that you share our social media page on Facebook and Instagram, and also subscribe to our YouTube page, HRCOCPA, for more information. Thank you for watching this hopefully wonderful presentation that we just put together for you, because we want to make sure you get the proper information when you're about to make your decisions in regards to choosing a health plan. Again, thank you for watching. Ciao, ciao, à la prochaine. Thank you very much.